This is the Bitcoin market report for July 30th, 2025. We hope the content in this deck is useful for you, but we encourage you to do your own research before making any investment decisions. Today, we'll look at a few Bitcoin news headlines, a bit of macro, and the usual stack of charts to get a sense of the Bitcoin market. We've added a few more charts, including historical monthly returns, monthly volume comparisons, and more. Let's get started. The Bitcoin Fear and Greed Index remains in the greed zone, but has dropped over the last 10 days. While the crypto market is generally exhibiting strong positive momentum, Bitcoin price action has been in a range over the last week. While Bitcoin has seen impressive monthly gains around 10% over the last month, its performance in the most recent 7 to 10 days has been relatively flat to slightly down, while altcoins have seen a bit more volatility. While we have seen a modest uptick in Ether and altcoins generally, Bitcoin dominance remains strong at 60.9%. Bitcoin dominance is a metric used to measure the relative market share or dominance of Bitcoin in the overall cryptocurrency market. It represents the percentage of Bitcoin's total market capitalization compared to the total market capitalization of all cryptocurrencies combined. On July 18th, President Trump signed the Genius Act into law. It is the first major federal legislation on digital assets in the United States. The Genius Act primarily establishes a comprehensive regulatory framework for payment stablecoins. It defines a payment stablecoin as a digital asset designed to be used as a means of payment or settlement, where the issuer is obligated to convert, redeem, or repurchase it for a fixed, monetary value. It creates a licensing and regulatory regime for domestic payment stablecoin issuers and sets standards for foreign stablecoin issuers participating in the U.S. market. On the 29th of July, the SEC approved in-kind creations and redemptions for Bitcoin exchange-traded products. Previously, these ETPs were restricted to a cash-only model, meaning authorized participants had to exchange U.S. dollars for ETP shares, and vice versa. The new in-kind model allows APs to directly exchange real Bitcoin for ETP shares, and vice versa, bringing crypto ETPs in line with traditional commodity ETPs. Other legislation is also in the works, including the Clarity Act. This bill aims to provide a clear market structure framework for digital assets, specifically addressing the long-standing jurisdictional ambiguities between the SEC and the CFTC in regulating digital assets. It proposes definitions for when a cryptocurrency or token is a security regulated by SEC or a digital commodity regulated by CFTC. It places the burden on issuers to demonstrate decentralization to qualify as a digital commodity. If passed, the Clarity Act would be a major step towards providing legal certainty for various crypto assets, including Bitcoin and Ether, by clearly defining their regulatory oversight. Passed the House of Representatives on July 17, 2025, the anti-CBDC bill's path in the Senate is less certain, though there's a push to include it in must-pass legislation like the National Defense Authorization Act. This bill explicitly prohibits the U.S. Federal Reserve from issuing a central bank digital currency. And de minimis crypto transactions are also being debated by lawmakers in the U.S. The White House has expressed support for a de minimis exemption for small crypto transactions. Senator Cynthia Lummis has proposed legislation to exempt capital gains on crypto transactions of $300 or less, with an annual cap. The U.S. M2 money supply surged 4.5% year-over-year in June to a record $22 trillion. This marks the 20th consecutive monthly increase and the largest increase since July 2022. The surge brings M2 closer to the 2000 to 2025 average annual growth rate of 6.3%. For perspective, U.S. M2 money supply was about $8.46 trillion, or 62% lower, at the end of the 2008 financial crisis. For your pleasure, here is your regular dose of chart voodoo, looking at some high time frame levels of the Dixie. The U.S. dollar has ticked up over the last week or so, after hitting multi-year lows. Hotter than expected consumer price index data for June dampened market expectations for a Fed rate cut in September. The probability of a September Fed cut reportedly fell from 59.3% to 53.5% after this data. and Chairman Powell's comments on July 30th suggest that a rate cut is not coming in September. In the last 2 weeks, several companies have made significant Bitcoin purchases as part of their treasury strategies, reinforcing the trend of corporations diversifying their balance sheets with a digital asset. Over the last week, Galaxy Digital executed one of the largest notional Bitcoin sales in history, an 80,000 BTC transaction on behalf of a long-term client. Over last weekend, Bitcoin's liquidity faced a significant test, as a large-size early investor distributed this 80K Bitcoin via Galaxy Digital's OTC services. However, the market has remained resilient with a supermajority of investors still holding unrealized profits. On July 29th, Strategy announced that it had acquired an additional 21,021 Bitcoins at an average purchase price of approximately $117,000 per Bitcoin. This brings Strategy's total Bitcoin holdings to 628,791 Bitcoin, valued at nearly $74 billion at current prices. And on July 30th, the Smarter Web company in the UK announced it purchased an additional 225 Bitcoin at an average price of approximately $118,000 per Bitcoin. Along with the solid ETF inflows, these Bitcoin treasury purchases may be one reason why there appears to be a bit of a floor on the Bitcoin price. Excluding Strategy, while these treasury companies have not been and are not yet operating at scale and they have not had a huge impact on price, they are one factor that is keeping buying demand healthy in the current price range. Companies like Riot, Galaxy, and Metaplanet continue to purchase Bitcoin as part of their treasury strategy. Bitcoin has returned about 10% in July, slightly higher than the average return in July. And since April, we've seen slightly higher than average returns each month. August tends to be a sideways or down month for Bitcoin, so perhaps we'll see further chop in the price. Given Bitcoin's recent all-time highs followed by a declining daily RSI, which has now dipped to 57 from an overbought high of 75, what's going on? The market might be experiencing buyer exhaustion. While there's enough buying pressure to push the price to new highs, the strength and enthusiasm of that buying are diminishing. This means fewer new buyers are stepping in at higher prices, or those who are buying are doing so with less conviction. According to several Onchain valuation models, Bitcoin remains range-bound between 105 and 125K. A decisive breakout above this range could open the door to a move toward 141K, an area likely to see increased sell-side pressure given the high unrealized profit expected at those levels. After a significant rally to all-time highs, many long-term holders and short-term traders might be taking profits. This selling pressure, even if not enough to immediately crash the price, contributes to the decline in momentum as it absorbs new buying. In some cases, large institutional players or whales might be slowly distributing their holdings into the market, even as retail investors continue to buy into the narrative of new highs. This quiet selling absorbs buying pressure and contributes to the divergence. This sideways movement, while still at high prices, naturally leads to a cooling off of momentum indicators like RSI. The market is taking a breather as bulls and bears battle for control. Spot volume has been relatively healthy in July, totaling more than $1.65 trillion. Kraken's Q2 financial highlights mentioned that while overall exchange volume was up 19% year-over-year, Q2 volumes decelerated quarter-over-quarter, as Q2 tends to be a seasonally lower quarter for trading activity. This general seasonal pattern would likely carry into July. Despite Bitcoin hitting new all-time highs in mid-July, the spot volume has shown signs of cooling off in the second half of July. This is an important observation, as strong, sustainable rallies are typically confirmed by robust spot volume. The lower spot volume could be seen as a warning sign of weakening conviction at higher price levels. However, Bitcoin's implied volatility continues to remain low. Open interest OI in Bitcoin perpetuals remained well below May's highs and largely stagnant, sitting at around 266,000 Bitcoin. Funding rates were also low, averaging 2.5% annualized, suggesting a sustained reluctance to take on new long positions and that perpetual trading was below spot for parts of the month. There was a sharp reduction in leverage, with notional open interest falling to 257,000 Bitcoin, the lowest since early May with less potential for larger liquidations of leveraged positions. We could continue to see more sideways action as we head into August. Overall, the dominant sentiment from the low implied volatility suggests less fear and more stability in expectations for the near future. Now let's look at a few on-chain metrics. The PwL multiple provides insight into the supply side of Bitcoin's economics, specifically focusing on miner revenue. Miners are a significant source of Bitcoin supply as they continuously bring newly minted BTC into circulation. The PwL multiple helps understand how much financial pressure or incentive miners have to sell their Bitcoin, which can impact market price. The PwL multiple has remained relatively muted compared to previous bull market tops. At the end of July, it sits right in the middle of fairly valued range. The market value to realized value Z-score is an on-chain indicator used to assess whether Bitcoin is overvalued or undervalued relative to its fair value based on its historical on-chain activity. Typically, a value over 5 signals the Bitcoin price is overvalued and can precede a correction. A value less than 0 signals Bitcoin is undervalued and could be a potential accumulation zone for some traders and buyers of Bitcoin. While real-time data for July is dynamic, the market's continued upward trajectory suggests it has likely remained in a range around 2.5 or has moved slightly higher, but is not yet into the historical red zone above 7. The net unrealized profit/loss metric is an on-chain indicator that visualizes the overall profit or loss status of the entire Bitcoin network. It's a tool for identifying different phases of Bitcoin market cycles, particularly around market extremes. Even after the large galaxy distribution event, the magnitude of unrealized profit held by market participants remains strong. Over $1.4 trillion in paper gains are currently held, with 97% of the circulating supply still in profit. So we're still in the belief/denial phase, which makes some sense. You see a growing acceptance of Bitcoin as part of the global financial system, so there's belief that it will be around in the long term. But you also see a denial phase by some that the all-time highs are too good to be true, skepticism about having a massing bull rally in this cycle, not a lot of fear of missing out yet. But let's see. Following the Galaxy transaction to purchase 80,000 Bitcoin, the net realized profit/loss metric, which tracks aggregate realized gains and losses on-chain, surged to a cycle high of $3.2 billion. However, NRPL has now cooled to $1.4 billion, signaling that initial profit-taking may have peaked. Thanks for tuning in this week. If you like the work we do, please give us a like. It will help us reach others. And subscribe to our channel to receive notifications of upcoming videos.